What's going on, everybody? This is my first solo live stream, so you're gonna have to cut me some slack. But there's a lot going on in the crypto space. What's up, Hex Devon, Chad Donner Schwans of Donner has entered the chat. We got minding. Oh wait. Oh shoot. There we go. Figured it out. All right, sorry about that. So let's just get right into the news. If I could share my screen. First up, we got, oh, great. Audio's great. All right. First up, we got the Bitcoin chart. Right now, Bitcoin is just dumped. It's at 16,337, a little bit up from yesterday, which I don't know. The question is it going to make that 11K and pray, or will it go lower and we'll have to pray? So that is going to be very interesting. I guess that will really depend on the news, but right now everyone's calling for 10, 11K, which is not really so impressive considering that Richard was calling for that when it was at 40, 50, 68,000. And then we got the Hex chart. Refresh that. Got the Hex chart, and we're down at 2.73 cents. Looks like we really confirmed breaking that 3-cent area. A big reason why people are saying that we're going lower and we will continue to go lower is because there's a wallet that emergency end staked over 2 million hex. Over 2 million hex. Over, how much was it? Got it here. Yeah. Oh, 207,473,068 hex were emergency end staked. So people are saying that we are going to be going a lot lower because he has a history of dumping and he doesn't put limit orders. He just market sells. So I guess we're going to have to see that. He's been selling little by little. He's trying to extract as much value as he possibly can. But the thing is, like, we could see who end staked, but we don't see who is willing to buy as the price goes lower. And being that there are more and more people getting onboarded every day, I think it's likely that if he's going to face slippage if he tries to sell a lot at a time. And I think a lot of people, probably myself included, are going to buy right back. So we're going to have to see how that plays out. But check out his wallet here. So it's DO1. People are calling him DO1. He sent his hex out to a different wallet. ERC20 transactions. There we go. Yeah. Sent it here, and his last sell was 314,000 5 hours, 41 minutes ago. Oh, he just sold recently. Look at that. Just sold, for some DAI. So I guess we're going to see how that plays out. I'm sure people are buying, and as it goes lower and lower, more and more people will buy. So the question is it going to go to a cent? I don't know. I mean, it could or could not, but I think that's why the best strategy is just the dollar cost average. And that's what I'm doing, not financial advice. Do your own research. We got a tweet here from Motley Investor. I saw this. He addressed it. He's like, the DO1 address, or as I like to call him, Dopey the whale, is finally done dumping hex. The pump may resume. Don't be like Dopey. Be a smart whale. Limit orders exist to protect the price and take profits. So that's that. I don't know. What do you guys think? Are we going to be headed lower, or are we going to be headed for higher prices? Let me know what you think. Now, the big news is the digital currency group. If I could pull that up, I just saw an amazing article by Dirty Bubble Media. You should follow him on Twitter. He actually, I remember he was ahead of the FTX game. He was calling out Sam Bankman-Fried before they were officially insolvent. And he was right on that. Another person who you should follow is Arturo. I remember him being ahead of the game with Celsius. I don't know if Dirty Bubble was ahead of the game with Celsius, but these people are really at the forefront. They're really in front of the news. That's where you really go to Twitter. You could find people that are like ahead of the news. And he is not saying good things about the digital currency group, which it's not looking good if you'd have to ask me. He's also saying not good things about Coinbase, which is a little bit scary. But I guess we're going to see how it plays out. Let's go read this article. So he says the digital currency group. Am I shared screen? Oh, perfect. Digital currency group has long been a darling of the crypto industry, led by early Bitcoin adopter Barry Silbert. DCG acts as the parent company for a group of crypto-related firms that touch on every aspect of the crypto economy. One of the major components of his business is Genesis Trading, a global leader in institutional digital asset trading, derivatives, lending, and custody services. Not your keys, not your coins. One component of Genesis Trading is Genesis Global Capital, a crypto lending firm that managed funds for other institutional partners. So one of the largest of these customers was the Gemini Exchange, which operated its own yield program targeted at retail investors. So you had Gemini was using Genesis, and I know Gemini Earn halted withdrawals. So the people that put their money there are not getting it out. We'll see how that plays out. So far, like if you just go off previous performance, like of Celsius and Voyager and things like that, it's definitely not looking good. And that's definitely not looking good for Gemini as an exchange if they're just losing customers' money. Has the name on it. It's Gemini Earn. So, I mean, it's not officially Gemini, but it carries that name. So it's definitely bad for the brand. He says Genesis and DCG were long assumed to be one of the most reputable and rock solid entities in crypto. After all, Genesis is a licensed and regulated broker-dealer. DCG also owns the Grayscale series of publicly traded cryptocurrency trusts, which has been a cash cow for their overall business. Thus, industry insiders were not surprised when Genesis Trading took to Twitter on November 8th to announce that they had no material net credit exposure to the collapse of FTX Exchange. So yeah, there's just so much lying going on in the space. I don't know if it's going to, if anyone's going to get held accountable. I guess technically maybe there's no regulation, so they feel like they could get away with it. But you see here, they said, with regards to today's market events, we have managed our lending books and have no material net credit exposure. In addition, Genesis has no exposure to any token issued by centralized exchanges. We continue to meet the needs of our clients across the around the world, across all products. So that was on November 8th. And then November 9th, they said, we want to provide an update on where things currently stand with our lending business in anticipation of the extreme market volatility yesterday. We hedged and sold collateral, resulting in a total loss of $7 million across all counterparties, including Alameda, which is obviously affiliated with FTX. So they said, as part of our goal in providing transparency around his this week's market events, the Genesis derivatives business currently has $175 million in locked funds in our FTX trading account. This does not impact our market making activities. Okay, so they said, so finally they told the truth and disclosed that they were involved in FTX. And then November 16th, Digital Currency Group tweeted, today's Genesis Global Capital at Genesis Trading's lending business made the difficult decision to temporarily suspend redemptions and new loan originations temporarily. We've heard that word too many times before. It's just getting ubiquitous with temporary basically means permanent. It all started, I remember, with Celsius was temporarily halting withdrawals. And then you had BlockFi was temporarily holding withdrawals. I remember they were attributing it to Juneteenth. So just like a lot of dishonesty, and the fact that all these middlemen, all these counterparties, all these centralized entities that are using crypto not as intended are all so quick to like try and reassure everyone that things are fine. I mean, if you're back to one, your liquidity should speak for itself, meaning you should just be able to let all the customers that deposited cash out. But the fact that, you know, they always have to, they're quick to say that, no, we're back 1-to-1, we have no issues. And then all of a sudden they have a liquidity crunch and they can't let people take their money out. I mean, it's just really goes to show that that they're not really being honest, and they're doing things, shady things with the customers' funds and things like that. So it says, now Genesis and its parent company, Digital Currency Group, are desperately seeking a bailout to the tune of $1 billion. According to reporting from multiple sources, Digital Currency Group has been turned down by everyone from Binance to Wall Street vulture private equity firms. In the meantime, the customers of firms like Gemini are unable to recover their funds. Gemini alone are owed some $700 million. That's insane. So why have DCG and Silbert struck out? It turns out that behind the scenes, Digital Currency Group has engaged in financial chicanery to keep the company afloat. So then he goes on, what's Digital Currency Group? So that's basically Silbert was an early adopter of Bitcoin. Then he started a bunch of these big startups, big money. So he has Grayscale, you know, that's like custody for Bitcoin, Genesis, Foundry, CoinDesk. Could be maybe a little bit of conflict of interest in their reporting if they're affiliated with the Digital Currency Group. But basically, Silbert wrote a letter to his shareholders. Can read the letter here. So it says they had massive exposure to 3 Arrows Capital, being owed some 1.2 billion. Right, so that was Genesis was owed 1.2 billion from 3 Arrows Capital, and the Digital Currency Group basically came to bail them out. Right, so it turns out that Digital Currency Group didn't fill this hole with cash. Instead, they issued a promissory note for 1.1 billion to Genesis. So basically, they said, "Okay, so we will give you this amount of money after this given period of time." And clearly, and it seems like they're going to struggle finding that liquidity. So it says Digital Currency Group owes investors 350 million. So I don't know how they're going to pay back 1.1 billion if all this is alleged in this article is true. And they borrowed 575 million from its subsidiary Genesis Capital. And what they were doing, it says here, they were doing it to fund investment opportunities and buy back Digital Currency Group stock from non-employee shareholders. Wow. Sounds pretty similar to Alameda, you know, sending money to FTX to buy up FTT so they had more money. Basically, you buy shares of Digital Currency Group's equity of their stock, and then it shows they have a bigger balance sheet, even though it's a liquid, and then they could basically go to creditors and say, hey, can we borrow money? Look how much money we have in assets that, you know, we could sell in the case of insolvency. This is very interesting. Same flywheel thing here. Manage funds for institutions, borrow the funds yourself, invest in your own stock, hope equity price rises, raise cash through the equity sale loans. Yeah, it's the flywheel. They had that with Celsius. They had that with FTX. And now he's calling it with the Digital Currency Group. And he's been right many times. Is my audio coming in well? Looks like it. Okay, let's get back here. So So it says here, it's worth repeating this to make clear just how ridiculous this decision was. Genesis borrowed funds from groups like Gemini, largely generated from unlocked deposits by retail customers. Saying Gemini, I guess it was Gemini Earn. I don't think it was like regular Gemini. That would be crazy. This meant at any time, Genesis could expect large withdrawals of those funds to occur. Instead of investing in liquid assets or lending those funds to other solvent trading firms, digital currency took the money for themselves and plowed it into totally illiquid investments. Wow. Same mistake that Celsius made. Failed crypto lender used billions of dollars to invest in Bitcoin mining. The illiquid sell token, FTX did it with FTT. That is crazy. So then he talks about Grayscale, which is their most profitable venture, 75% of the total expected revenue. So that's their only way of raising money. So that's the most profitable venture. 75% of Digital Currency Group's total expected revenue. This does not include the roughly dozens of other products. So I guess the big question here is as to whether or not this would, if Digital Currency Group would go under because Genesis is insolvent and they can't pay back their debt and things like that, then what really happens to Grayscale? Would that roll over into Grayscale? Or is Grayscale going to have to start liquidating their Bitcoin holdings, and just giving back their investors cash, or maybe just giving them Bitcoin, like either or kind of thing? So I guess that's really the big question. So just to be fair, I got an article over here saying that it says Bernstein says Grayscale Bitcoin Trust is protected from fallout at sibling company Genesis Global. So that's Coin, but isn't CoinDesk owned by CoinDesk, which is owned by Digital Currency Group, is saying that Grayscale, which is also owned by Digital Currency Group, is protected from the fallout. So I don't know. You could read the article here. It's at a huge discount. People don't want to buy it. But what do you guys think? Do you guys think that Grayscale would be unaffected by this fallout? Because CoinDesk is saying it would be unaffected. But my take is that we just heard this so many times, and when we've heard like this so many times, we heard this idea that no, nothing's really, there's no problem really, everything's okay, and it always turns out that everything's not okay. In fact, pretty much every time they've been saying, oh yeah, we're just having a little bit of liquidity issues, we have to stop withdrawals, things are going to be okay. Things weren't okay, but is it going to continue? I guess Gemini so far has been okay. Gemini, not Gemini Earn, but regular Gemini has been okay. They've been allowing withdrawals, but I guess only time will tell. It seems like we're at peak FUD, but I mean, it really just depends on the circumstances. So I guess as things play out, we're going to see more. We're going to see if we go to 11K and even lower. I guess that would depend on how these things play out. If these companies are insolvent, then that would be really, really bad for crypto. But people are saying do I even need these headphones on? A lot of people are saying that that this would be the end of crypto. Like if Digital Currency Group goes under, crypto would be done. But I don't think that's true. I think there's just so much consensus especially with regards to like Bitcoin and Ethereum and things like that, that there is going to be big money that'll want to pick it up at a certain price. I mean, the question is how low is it going to go? But you see like these big names like Kevin O'Leary, Scaramucci, who else is there? All these funds. I know BlackRock is doing cryptocurrency now. Just very, very big, very wealthy people um, are interested in crypto, and there's consensus among them that it's worth something and that it's worth holding. So, I mean, if all these companies go down, if let's say Digital Currency Group and Coinbase goes down, which would be insane, then it will inevitably, yeah, they're going to have to. There's going to be some sort of cascade because they're going to have to liquidate in order to pay back their investors and maybe some of their depositors and things like that. But inevitably, as the price gets lower and lower, there are going to be more people scooping up. Just like think to yourself, if Ethereum's going to under $100, are you going to buy some? If, like the projects are still going, they're still building, the community's active. Like I mean, people maybe not me because I would prefer Hex and Pulse and PulseX obviously, but there just would come a point where people are going to buy. And I think also this industry is very profitable. Like if like people would want to own an exchange, and operate it with integrity and not use their users' funds because you can make a lot of money. I mean, just the problem is people get greedy and they think they could get away with whatever they want. And they could just basically, take their customers' funds and trade with it, or just, create political donations and things like that. Like donate to, the Democratic Party, things like that. And that's when things really get bad. But even if it was highly regulated, I think there is a market, to run exchanges, and there's a market for crypto, and it will inevitably come back. The question is just how low could it go? That's really my take on that. And then we have over here, they're even saying Coinbase. I guess we could pull that up. Yeah, Mario Naufal. Is CZ implying Coinbase custody does not hold one-to-one BTC? So yes, CZ basically had a tweet inferring that, but he deleted it. But I mean, I think the problem is Coinbase's solvency is dependent on more than just having assets backed one-to-one. Well, first of all, yeah, this is CZ's tweet. Coinbase holds 635,000 BTC for Grayscale 4 months ago. Coinbase, I assume, exchange has less than 600K BTC. So he's just making that presumption, just stating news reports, not making any claims. Glassnode probably has more up-to-date data. So then he redacted it. But then we got here a little thread. So this is really the meat and potatoes, because Coinbase remaining solvent is more than just them being backed one-to-one. They could still go out of business, because it says here the bonds are trading at a massive discount, which means that creditors don't trust them, which is not good, because that means that it's going to be very hard for them to borrow money. And a lot of these companies rely on borrowing money. And then in May, it says that the CFO warned there's a small risk of bankruptcy. Brian Armstrong is defending the company's financials. Yeah, and that's the tweet from CZ, quoting bitcoinist.com. But it's more regulated. Unlike FTX, Coinbase is an SEC-regulated company with much higher reporting standards. So they also have to be more transparent. According to their latest 10Q, Coinbase sold over $95 billion in customers' crypto assets, plus $65 billion in US dollars held on behalf of customers. Shows their balance sheet. The stock is down 83%, which is horrible, because they're a growth company. They needed to sell shares in order to raise money. So they're extracting less and less liquidity from their stock. And obviously it's not good. They probably rely on, debt and getting money from issuing bonds to creditors. And here's another thing. So they require high trading volume to make commissions from the fees to cover the operational costs, quote, massive operational costs. But with cryptocurrency in a bear market, that trading activity is drying up in two ways. Customers' accounts are less valuable, right? So they can't extract as much value from the fees, because the fees are a percentage of the trading volume. And the lower interest rates in crypto means people will trade less often. And the lower interest, in crypto means people trade less often. So that's, I think, that's the big thing right over there. It's that it's like people are saying, Coinbase, get this out. Get rid of this. There we go. People are saying basically that Coinbase is relying on, like, oh, they're not backed 1-to-1, and then Brian Armstrong is saying they're backed 1-to-1. First of all, it's a little fishy that Grayscale, Bitcoin Trust, and Coinbase are refusing to do an audit, to have an audit, to ensure that they're backed 1-to-1. They're saying it's for security reasons. It's basically you have to take them at their word for it. But exchanges in general don't have a good track record of telling the truth. But obviously, it may or may not be true. I don't really know so much about how that works. And they gave a thread. I don't know if they really gave such a great explanation. Maybe they did. Maybe they're back 1-to-1. Maybe they're not. But even if they're backed 1-to-1, it's more than that. For them to stay solvent, they have to be making money on. They have to be able to borrow money, which obviously their bonds are selling at a huge discount, so it's probably hard for them to borrow money. And they have to be able to make money off trading. And there's not a lot of trading going on, and that trading in the assets that are being traded have lost so much in value. So that is not looking good. But I guess and their stock's down over 80%. There was like a tweet I saw. Someone was saying Jim Cramer said that there was a tweet of Jim Cramer saying, I like Coinbase at 475 or something. Yeah, we know his track record, but that's really the overall point, is that Coinbase being solvent it relies on a lot more than just being backed 1-to-1. And Coinbase, like, not going down, I guess. So if they go down and they're back 1-to-1, would that lead to that? That would probably be very bad for the markets. But I see a lot of people, like, I was on this WhatsApp group chat for crypto, and I see a lot of people are saying, oh, like, which exchange should I use? As in, which exchange should I park my money in? Like, the idea of keeping their funds on a cold storage, on a hardware wallet, it doesn't even exist in their mind. It's just like not even a factor, which is crazy. I mean, just so many people don't want to spend the money and take the time to learn cold storage. It's so important. But what's awesome about Hex, and why I'm so bullish for Hex, is because Hex incentivizes learning how to use a cold storage wallet, because you can't earn the yield. You can't earn the yield unless you take it off the exchanges. So I think that's another reason to be extremely bullish on Hex, because people want yield, right? There's product market fit for yield. There are all these big centralized exchanges. There's Genesis. There was Salt Lending, Celsius, Voyager, just an endless amount of these, third parties that people would deposit hundreds of millions of dollars worth of crypto, billions of dollars worth of crypto, in order to earn 4 or 5% interest on their Bitcoin, maybe 10% on their USDC. And then you have Hex, which appreciates faster and pays yield trustlessly, not from one third party, and not from giving up your keys. And it pays a yield of, 35 to 38%, on these stakes that are more than 6 years. The ones that are less than that, like 20%, whatever it is. So faster appreciating asset, and obviously a higher payout in terms of percentage yield. That's going to be huge. I think that's why, if you look at Hex daily stats, even though the price is going down, I check Hex daily stats. You guys got to check Hex daily stats every single day. Check it every day. This is crazy. So you have the change in current holders. That's 116 yesterday. 116 new holders, and current stakers 96. So that means 116 wallets that have never staked Hex, that have never owned Hex, like bought Hex, and 96 staked. And then yesterday there was 191. So pretty much every day except here, where there was -3, there's double or triple digit increases despite the price going down. That is more consensus that Hex has value, has product market fit. It's very exciting. And the best part is that you get copied over on the pulsechain, which is awesome. But yeah, that's that. Now let's move on a little bit. So yeah, this guy here, I don't know. He basically said that it's unlikely that they're a scam and they're not back 1-to-1, even though they turned down an audit. They're saying because he's under SEC supervision and audits every quarter. It's way too simple. It's way too easy to see if they're doing any funny business. The Bitcoin should just be sitting there. And if it's not like you have to really go deep on like what's happening on the exchanges. It's either the Bitcoin's there or it's not. But I don't know. I guess time will tell. Oh yeah, and then just to end with the last tab I'd say is some bullish news. It says Jim Cramer has said that investors should cash out of crypto while they can. Do you agree? That is super bullish, I'd say. But I don't know. I guess everyone's wondering if the bottom is in yet, or like how much pain there is until the bottom's in. It's a good question. So I was watching this guy, Nikita Russo. He did some coverage of the 4-year cycle. So the longest bear market there's been would mean if this bear market is as long as the longest bear market that we've been through, the latest time for the bottom would be on December 20th, so in under a month. Obviously, past performance is not indicative of future results, so it could go longer. I think that's dependent on a lot of things, including the interest rates and inflation and things like that. But it does, I keep on repeating this, it does seem like inflation's coming down. So the last inflation read was 7.7, which was lower than expected. I think it was down from 8.3. And I think the idea that it will keep going down is inevitable. I keep on hearing these stories about these used cars that can't get off the shelves. And there's also, a lot of these like luxury goods and things like that were selling like hotcakes are not selling anymore. And what happens when these things don't sell is the price goes down, So in the beginning, you had inflation, you had these stimulus checks, which gave a huge excess of money to people in the middle class. So the rich people, they don't really cause inflation, because basically the way it works is that with inflation, in times of high inflation and low inflation, saying the rich, their spending is constant. They're buying the same things. They're buying the expensive foods. They're buying the expensive cars, expensive clothing, all the things that go up in price during times of high inflation. The rich people, their purchasing is stagnant because they always have money. They have sources of income. They have real estate. They have dividend stocks. They have businesses, and they have high-paying jobs. The thing is that the middle class, their spending doesn't stay constant, right? So the middle class, their spending fluctuates. In good times, right? They, where they have a lot of money, they spend more money, which really lowers the supply, and there's an increase of demand. So then that's when prices start going up. And what we had with COVID was there was a massive increase in people's money because they were staying at home and they were getting this unemployment, and they weren't spending it because they were at home all the time. And then obviously the economy reopened and they had this tremendous excess of money, and they were just spending it like there's no tomorrow. So the prices went up, and then they went to their employers, if they weren't getting the COVID, and they asked for a raise to maintain their lifestyle. But there's only so many raises you could really get. Eventually the raises stop and the prices keep going up, and then they just cut spending. And when they cut spending, there's less demand. And when there's less demand and the supply remains the same, inflation comes down. And that's what we see happening. It happened in the 80s. It happened I think after World War II, I don't see why this time would be any different. Everyone's saying this time is going to be different. I don't see why this time would be different. It seems like things just keep on repeating themselves. Could these high interest rates extend the bear market? It's possible, but I think I feel a lot safer in this bear market than the previous one, because in the previous one, it was a question of whether crypto would still exist. I think everyone agrees that crypto is going to exist. The question is just how long's the pain going to last? How low could prices go? And obviously, you just got a dollar cost average, because if, in my opinion, not financial advice, but if you're just buying dips, whatever, you could start to get really greedy on a dip, and then you're out of money when it dips more. And in crypto, things just feel like they could dip forever. That's why the best, in my opinion. So like sometimes I spend a little bit more on my DCA, but it's always this, the same day, because you just got to spread out your buy, make sure that you have enough cash that you could pay for the things that you need to pay for. So when the price goes down, if you have enough money to take care of yourself, then what's the problem? In my opinion, not financial advice. We've got 44 watching. That's great. Is there anything else I wanted to cover? Does anyone have any questions? Let's look at the chat. Got Minding Crypto. Hi, fam. Hi. Yo from Entheosapien. Phonician Hexagon. Stizzy Jones. That's more hex than is in LP. Mickey. That's what everyone said about 10 cents, 8 cents, 5 cents. It keeps going lower. I mean, that's why I just dollar cost average, really. I guess if you're referring to hex. I remember when the price was at like 40, 30, whatever, people were saying if it goes to 20, I'm going to back up the truck. And then it got to 20, and then everyone was saying if it goes to 10, I'm going to back up the truck. And then it went to 10, and everyone said if it goes to 5 cents, I'm backing up the truck. Then it went to 5, and it keeps going lower. And I feel like there will come a point where people just get left behind. That's why I just DCA. I don't want to get left behind. And I'm at the point where, if it goes up from now, I'll be okay. If it goes down, I'll be okay. So yeah, that's really what it is. And the question you really have to ask yourself is if you think hex is going to stick around. And in my opinion, not financial advice, I think it will. Yeah, Minding Crypto. Smash the like, guys. Yeah, guys, please smash the like. Please hit the subscribe if you enjoy the content. Hope I did all right. This is my first live stream. My first solo live stream. I had one before with Ben Dubard, and I was on a couple other shows. I'm scared to buy anything because Coinbase holds my funds for 4 days before I can withdraw to spend it. I think that's because you use Coinbase with your bank account. If you use a debit card, I think you could just withdraw it right away. But I'm not sure. Sorry about that noise. 1 second. Sorry about that. Yeah, I think that's how it works. I think if you use a debit card, you could immediately withdraw. That's why people are saying crypto's so innovative, because crypto, with regular finance, it takes like 3-4 days for a transaction to settle. But with crypto, even Bitcoin, which is considered slow, takes 30 minutes. But a debit card, I think, doesn't. I don't know exactly how it works, but you can get it out right away. Rico, I bought last night. Definitely wouldn't mind another dip. I need a little more time to secure my bag. Yeah, I agree with that 100%. Just DCA, in my opinion, not financial advice. Unsung hero, steady lads, deploying more capital. All right, all right, all right, all right. Fire. In the case of E-Link and Link on pulsechain, what is the relationship between the price of E-Link, Link, the APR, and value of INC? I think you're referring to INC. Is that the incentive token? So with E-Link and Link, what is the relationship between the price? So E-Link is Link on Ethereum, and Link, P-Link, I guess, or Link. That's the way they call it. That is the copied over system state. That's the copied over link on pulsechain. The relationship between the price. I mean, so there may or may not be a relationship. A lot of people are saying parity. I don't think there's going to be parity because they're two totally different. They're not. When there's parity, like between like a bridge coin onto another network, like if you bridge over wrap BTC, there's parity because there's arbitrage. So if the price goes low enough, you could just bridge it back on the other side and sell it for the market value. You can't do that with E-Link and Link. E-Link and Link are two totally different coins. I would say Link on pulsechain is going to have a smaller value, at least in the beginning, because the community is on Ethereum. But that could change. I mean, that really depends on the gas fees. But that could change. It may or may not change. Maybe one day Link will be completely on pulsechain, which would be awesome. And in that case, I think that pulsechain Link could be worth more. People are saying they're going to pair them in liquidity pools, so that could have the prices go move up and down. They can move in tandem, like the same way Bitcoin and Ethereum move in the same direction. But the percentage changes in price are different, and they're obviously not at parity. So I think you could have that with E-Link and P-Link. But okay. And the APR and value, I think you're talking about the incentive token, right? Oh, there we go. LP is rewarded with incentive. The APR, the way I kind of see, I guess that's for the PulseX token. I hope I'm right. The PulseX token for staking your PulseX, you get the incentive. The way I kind of see it is kind of like you have VeChain, and then if you hold VeChain in your wallet, you get this token called VeThor. And that is the gas token, and it's basically just airdrop for free, like every minute or whatever. There's like a certain percentage you're getting. But since it's obviously given for free, it really gets dumped into oblivion. I'm sure there's a lot of people that are compounding it to get more VeChain, so then they could earn more of the VeThor. And you have that with Theta. There's Theta, and then there's T-Fuel. So usually the one that you get for free doesn't appreciate as much. That's what I'd say with the value. I don't know what the APR percentage is. We'll have to wait and see. Opinion on which stable is the best to keep. Which stable is the best to keep? Funding Jim said there's this one called TrueUSD because it basically requires depositing $1, and then on the other side you get it's basically, I think it's trustless. I don't know. You have to really do your research. I'm not really such an expert on stable coins. I think it's just the USD is maybe tied up in a trustless kind of thing where it could come out on the other side, and it's always there for you, trustlessly when you redeem it. I heard he said TrueUSD. Funding Jim knows a lot, so I will look into that. USDC seems a bit better than Tether. I don't know. I think all bets are off, but I guess we'll have to see. I don't know. You'd have to ask him. I onboarded friends at 50 cents. I hope you told them that they shouldn't put in more than they could afford to lose. I don't know. The way I kind of see it with onboarding is if you really tell people that, you tell people the risks that crypto, like Richard, speaks about in his live stream, saying like crypto drops 95%, and Hex could do that. And then once it happens, I think once you're aware of it and you put your money in, people aren't, as upset. They know you told the truth. So, and they know, and at that point, it's like, it's on them. But if you're telling them, oh yeah, it's going to go up, I think it's going to go to $1.50, it's going to go to $2, it's going to go to 10, and then $100 before it goes down, then that leads to resentment. So I hope they're still your friends. I guess they are because they're calling them friends. Same fam, real Chads, DCA, exactly. It's the only way to do it, because when it goes down, it's very hard to buy. But if you're in a rhythm, you just have to keep doing it. I think that's really what it comes down to. DCA staking years. I don't know. You have to figure that one out yourself. How much Pulse X should someone accumulate before the bull market? Thanks, man. I don't know. That depends on that really depends on you, I'd say. I mean, everyone's different. It depends on how much money you have, how much cash you need to live on. That's why I say I'm not a financial advisor, not financial advice. But it really depends on your situation. I would say this, though: if you're overinvested to the point where you don't have any cash, it's going to be very hard to hold, man. Because that's why I keep on telling people that it's smart to at least buy the S&P 500 for the Roth IRA, just so that you have some money in something that doesn't drop 95%. It's hard to stomach volatility when all your money is in something that drops 95%. But that's up to you. You got to do your own research. Doing great. Oh, thanks, man. Thanks, Modik in it. They stake so they will be okay long term. Yes. Though I dynamically DCA increase money of buys at these levels. Yeah, that's what I'm doing. That's definitely what I'm doing. But do your own research. Not financial advice. What's your current staking years on the ETH platform before pulsechain launches? Yeah, so I'm saying I have stakes coming out every year personally. There are a lot of people that are saying not to stake because, the gas fees are going to be too high. I believe Ethereum is going to take care of the gas fees. I think it's going to be affordable in the future. Obviously, that's just my opinion. It's not financial advice, but I think Ethereum is a very innovative blockchain. I think it's the best bet in terms of blockchain. They have the most activity. They have a genius founder. You got to respect Vitalik, and he has the respect of the community. And he's shown seriousness about really moving forward by switching to proof of stake. So I personally, a lot of people are saying don't stake on Ethereum and just hold it liquid, get your copy, and maybe sell the ETH hex and stake more on pulsechain. I believe Ethereum is going to make it. There's a reason why there's a reason why Richard Hart chose Ethereum to do the system state fork. But that's up to you. You got to do your own research. You got to figure it out. They also have a solution. They have sharding. They say that's going to fix the gas fees. It's not like they don't really know what's going to happen, but something will come to solve it. I think they're really developing and they're really trying to figure out a way to figure this out. So I personally believe in ETH. So I'm staking on ETH. But if you don't want to stake, if you don't want to make a stake coming out for a year or two, I could understand that. But you got to figure it out. And thank you guys. We got 38 viewers, so thank you. Please smash the like and hit the subscribe button. I would really, really appreciate it. And that would make me want to make more content. I'm not an attorney, but I've heard that before. E-Link and Link LP is awarded 100% APR or 1,000% APR in transaction fees, plus incentive token reward. You must assume there will be a variable demand for Link on pulsechain PRC20. Interesting. You're saying because it's more of an incentive to provide liquidity on pulsechain, but I mean, if you provide liquidity, that doesn't necessarily mean the price goes up. That just means if there's more liquidity providing, I guess the volatility is lower. Yeah, there will be a variable demand for Link on pulsechain. Yeah, of course. Yeah, they're not going to be at parity. I think the idea that even EHEX and PHEX are going to be at parity, I don't think that's true. More APR is more demand for both. The more APR, the closer to parity. More APR. Oh yeah, because I guess the liquidity providers have to scoop it up, so they're gonna have to buy it. Yeah, but I mean, it's gonna be more demand, but you think that there's an entire community of people that value Link and they want to own Link the same way that Hexkins want to own Hex. I mean, if that whole community is on the other chain, you think that the APY of the liquidity providers is gonna exceed the demand of the community that buys it? I don't think so. Maybe closer to parity. Definitely Link on pulsechain. It's going to have a price. It's going to have value. Is it going to be as valuable as Link on Ethereum in the short term? I don't think so, but we'll see. FK18. Launch now. Okay. Yeah, I guess the closer to parity, but I don't think it's going to be a parity, but we'll see. I hope there's parity. That would be amazing. Yale being encountered. Interesting. Yeah, I don't know. I'm not really a fan personally of Zen because people are minting it for free. I don't know if the only thing you could really, if you get a token for free and the only thing you could do is sell it, what is that going to say about the price? When you buy Hex, first of all, you pay for it. So when you pay for something, you value something. But more than that is you have the ability to lock it up and earn interest. There's an incentive not to sell. Yeah, there could be an incentive to mint, but once you mint it, you're just going to sell it. So I think there's going to be a lot of sell pressure at every rip. And then, they're saying, oh yeah, but in 8 years, there's going to be no more minting. But I mean, if there's just the price keeps on going down and down, like people just leave the community and the price never goes back up again. I don't think there's an 8-year time frame to listen. I don't know. You got to do your own research, but I don't think you could just have such high inflation and such incentive to really just mint and sell for so many years and maintain a community, maintain consensus for the value. Most cryptos do not make it. Most cryptos cannot make a higher high after a cycle. Okay, so you look at 2018, you had the cryptos that made higher highs were that came back in 2020 made higher highs was Bitcoin, Ethereum, Cardano, Monero, Doge. Maybe there's one other. Very, very few. And there were hundreds of cryptos out there. And I don't think this would be the exception. I don't think this bull market would be the exception. I think most of the cryptos aren't coming back. You really have to have product market fit. You really have to have a community. You have to be solving something. I mean, when you look at Hex, there is product market fit for yield, right? And that the proof of it is just the billions of dollars that went into these lending platforms just to earn a little bit of yield. So this innovation of something that could give you yield trustlessly, it's huge. There's a lot of room for it. For this thing that people, I don't think so. I think also, yeah, I'm not a fan. I mean, you got to do your own research, not financial advice. EHEX or PHEX. So definitely in the short term, it really depends on the future of Ethereum and the future of pulsechain. So, I mean, which one's going to be a better chain and have more development in the community and things like that? Because the liquidity, the main pairing of liquidity on the Ethereum chain for Hex is, I think it's USDC, but the second one is Ethereum. So Hart's Law, we all know about that. The price goes up. So I think probably the main pairing for Hex on pulsechain is going to be PHEX. And I think, and definitely in the first bull market, maybe even the second, pulsechain is going to have better returns, in my opinion, than Ethereum. Not financial advice. It's not the only factor. Also, I don't know. I think in the short term, definitely PHEX, but I'm the way you get it is by buying EHEX. So people think like, oh, I'm just going to wait. Maybe PHEX is going to be cheaper at launch. I don't know. I just dollar cost average EHEX. I think both of them will go up over time. I don't know which chain's going to be better in 10 years, pulsechain or Ethereum. That's a big question. So I think that would really determine which one has better price performance. But I like Ethereum. I think Hexicans should have respect for the ETH community. I mean, I wouldn't want to FUD the network that half my hex is on. So I think Ethereum's going to do very well. I think they're going to solve the gas fees. They got a great community. They have a great founder. They are the best blockchain right now. So I just hold both. Is there going to be parity? I don't think there's going to be parity because the gas fees are going to be different. Because they're different products, different chains. The T-share rate's going to be different. They're just different. It's not like wrapped Bitcoin and Bitcoin. So I don't think there's going to be parity. I think the prices are going to move in tandem, but I don't think there's going to be parity. What to bottom first, Bitcoin or Hex? Well, Hex was to the top first. So I think maybe based on that, it would go to the bottom first. But again, there's no way of knowing. I think that like these kind of things would really depend on let's say, for example, you have this wallet that has 200 million hex that's been selling, has a history of selling. So like, what's he going to do? And I think that could be a factor. And then there's buyers. Like, what are they going to do? Are they going to buy it up? I mean, I just don't know. I think there's just a lot of variables. Also, so I don't know. Hex has decorrelated. It actually decorrelated today because it's been going down as Bitcoin's been going up. So it's really, there's no way of knowing. And I think getting caught up in these things in like these little details when you think that something's going to do well, like if you're here, you probably think Hex is going to do well. Oh, I should put this up on the, yeah. So just I think trying to time the market is pennies in front of freight trains. But if I have to guess, I'd say Hex bottoms first because it top first, but there's no way of knowing. And Ted Cash. Ooh, thank you for all you do for this community. We appreciate it. Hey, thank you, Ted. I appreciate you. And I appreciate everyone that's watching. Please, if you enjoyed the stream, like, subscribe, and follow me on Twitter. I really enjoyed this. This was my first solo stream. Apologize for the audio in the beginning, but I think that's a great way to wrap up. I'm confident that crypto is going to come back, and when it comes back, I think that the most likely projects to come back are the projects where there is commitment, there's buy-in from the community not to sell. I think that's something to be very bullish about, but not financial advice, and do your own research. I guess best thing for me to do is just DCA. But yeah, that's that. Thank you all for watching. Thank you for those who participated in the comment section. Hit the like, hit the subscribe, follow me on Twitter at furufinance, and it was really a pleasure doing this. Goodbye until next time.